This is a question in the context of the monopoly that LIC had on the insurance business ending almost 22 years back. There is a 5% float. It is going straight away into the government's coffers. But there are people who are asking, will it change the way LIC functions? Will it lead to an improvement? And I dare say, does there need to be any improvement in the way LIC is run as a government corporation?
I think before I come to this governance question, whether there would be change in LIC's functioning post the IPO, logically, structurally, it doesn't seem to be the case, because selling 5% of the shares does not change anything in terms of the board management or the governance. If you read the DRHP with the LIC, and it's a very well detailed DRHP, it speaks about that in governance nothing much would change. The government would continue to drive, they will continue to follow all those policies, directions, because 95% ownership would still be with the government. So I don't expect, but let me point out the basic things, basic facts about the IPO, I think, which we should keep in mind.
Right.
So the details which have been put out in the DRHP, the profit per share is only about 4 to 5 rupees per share, right? And now, if you think of any multiple, let's say 60 or even 100, any price beyond 4 to 500 would be excessive by any standard. There is a lot of discussion in the DRHP about some of the shareholders' money from even the participating policies.
Right.
Some shift will take place, but that shift would be small. It would not change the EPS from, let's say, 4 to 5 rupees to 15 rupees.
Okay.
Even if you take it maximum to that,
right, and
you price it 50 to 60 times, any valuation beyond 450 per share would be, to my mind, very difficult.
Okay.
So that would put, so the crucial question in my mind is, what is the price which the government determines?
Mr. Garg, since you are talking about price, let me take that point with Ajay Srivastav. Ajay, what should LIC share be priced at? What is fair value according to you, given all the numbers that you have seen so far and the size of this behemoth, which still controls well upwards of 60% market share?
Well, I think, you can ordinarily say, yes, it should be done on the PE multiple basis, but since it's coming to the market the first time, it's got significant market share, and that can be expanded if somebody runs it correctly. I would still believe that its pricing should be somewhere around 2 times embedded value. I think if it's higher than that, I think it'll have a problem in the market. If you make it 1.5 or 2 times, at least you've given room for the investor to see something off the table. That's it. The second part, more than the price, if you ask me personally, is the clear intention of the government. Will it offload another 5% in the market next year? Because the overhang of the government sale of any share, doesn't matter who it is, which share it is, the overhang of the sale can kill the price itself. So if I know that the government is not going to sell the shares for 3 years, I can live with a higher multiple. But if I know that the government is going to come with another 5% next year, then I have to just pare my expectation down, because then if the supply keeps coming to the market, then I need to find fresh buyers for those shares.
So
and
Ajay,
therefore the multiple...
Ajay, break it down for the average viewer who may not have that much exposure to the markets. Are you therefore saying that there is a risk that the government will do another float next year and that will depress the share price?
I think so. This should be, looks like a logical follow-up, because it was supposed to be closer to 10%. Given the market is looking like a 5% dilution, and it's the easiest thing for the government to do next year to bring in some resources, is to put another 5% on the block in the market. And that's a fear which investors should worry about, because if more supply comes to the market, naturally the price of the share gets depressed in any scenario, any company whatsoever.
So what's fair value according to you, Ajay?
I think it was closer to 1.5 times embedded value, which is the value. Embedded value is what is the present value of all the future profits of the insurance
So let's
company,
bring
all
up
the
that
policies.
chart again. Bring up that chart again. We have 4 different valuation scenarios, viewers, for you to consider. There is, of course, a view by some analysts who are talking about 4x, but we won't even go that far. Just for your reckoning once again, at 1.5 times 8 lakh crore, 2 times 10.8 lakh crore, 2.5 times 13.5 lakh crore, and ABHA at 3 times 16 lakh crore. And just before you take over, ABHA, I just want to remind you, viewers, that the first news break of the embedded value came on Business Today, came from Disinvestment Secretary Tuhin Kanta Pandey at a recent roundtable that we did post the budget, which is where he spoke about the embedded value being upwards of 5 lakh crore. And that, ABHA, sets the stage for what I would perhaps pitch in here as you ask your question. Is the government being conservative given the overall market conditions, ABHA?